Asia economist at Morgan Stanley, joining it to talk about exactly that. Chetan, hi, morning. Welcome to ET Now once again. Was just going through your latest note where you've talked about Asia's industrial cycle now turning up. Tell me, where does India stand in that cycle today?
So we've seen a turn in region's industrial cycle, but it's also not just region. We've seen that turn in the US industrial production, European industrial production. So we think that this is a sort of global industrial cycle revival. And something similar is happening in India data as well. As you saw last month's India industrial production also picked up. We think that this trend will have more legs to go. Because for Asia and India, I think the key driver to this industrial production recovery would be what happens to non-tech exports. So what we've seen in the last 12 months in the region is that tech exports have continued to do well, but non-tech has suffered because of tariff situation. But now that the tariff situation is behind us, even for India, and at the same time, we are seeing that the US recovery is going to broaden out from tech to non-tech. That will help global trade, that will help Asia's exports. And there are also a few other specific trends that are emerging to be combining at the same time. Number one, you are seeing everybody having to invest for AI-related infrastructure. We are seeing everybody in the region, for example, spending more on defense. So, Korea, Taiwan, Japan, and then as you saw in India's budget as well, the government has increased defense spending allocation by 18%. That will also fuel the industrial cycle. And then the third is that everybody in the region is having to do energy transition related capex. As you know, if you are investing more in solar, the old grid system will not work, so you have to invest in the grid system. So there is an additional ancillary capex that is emerging. So yeah, a combination of a number of factors we think is bringing this revival of industrial cycle.
Chetan, give us a sense of what inflation means with regard to policy, and I'd like to first keep it India-centric to try and understand how you're seeing the cycle. We're likely to see an uptick with regard to inflation of a very, very low base. How should likely the RBI play this, and how long will this cycle last for, this benign rate cycle, in your opinion?
So, yeah, it's a very good question. So as we see this industrial cycle recovery, exports improve, you are going to see improvement in capacity utilization. But look, inflation is still not a concern, not going to be a concern anytime soon, because the starting point of inflation is still very low. And if you think about the labor market as one source of potential inflation pickup, the labor market starting point is also that there is a significant amount of slack. So it will be some time before this recovery kind of results into a dynamic where inflation pressures makes RBI think about taking up a rate hike. So we don't have a rate hike in calendar year 2026. We have it only in 2027. So yeah, next few quarters, we should have a benign environment where growth is strong and inflation is still just heading towards normal levels rather than getting to a point which forces the RBI to think about rate hikes.
Right. Chetan, I just want to go back to, the point that you were earlier making about Asia's industrial cycle. And specific to India, what do you think at this juncture is acting as a tailwind?
So I think all those reasons that I mentioned to you are applicable equally to India, right? I mean, if you have a recovery in exports that builds up from here, with a tariff situation getting sorted out bilaterally for India, but also at the same time, the US recovery is going to broaden out. And so if India's exports pick up, we've always seen that has an implication for corporate capex in the region as well as in India. So it will trigger an additional improvement in capex, which in turn drives industrial production. So there's going to be a virtuous cycle that unfolds for India too. And the other three factors that I mentioned to you, AI infrastructure, defense, and energy transition related capex, is also something that India is going to have to build up from here. So yeah, it's going to be a virtuous cycle that will emerge for India as well.
There's been plenty of conversation that there is upside potential in US growth. Now, when the largest economy in the world grows at 4% instead of 3%, you'll end up adding a large amount to the global GDP. What are the pockets of growth within Asia? Can India benefit disproportionately from the kind of upside potential in US growth? I'm trying to understand whether India stands favorable versus the other economies in the APAC region.
Well, no, I think India is definitely less dependent on exports than the rest of the region, but it is a part of the driver for India's economy too. So yeah, on a relative basis, maybe it benefits the rest of the region more than India. But at the starting point where India is right now, where trailing earnings numbers have been weak, revenue growth has been weak, additional support from exports will ensure, in addition to the effort that the government has taken to lift domestic demand and domestic consumption, it will be helpful if you get this exports recovery too. So yeah, I think it should be seen in the context of where India is at this point of time. And yeah, more importantly, investors are already quite bullish on rest of the region, particularly Korea, Taiwan, and Japan, which is related to the US AI demand and the tech demand, whereas India doesn't have semiconductor exports, and so it has not benefited from this. And independently, because of the weak domestic demand, foreign investors' positioning in India is at a 25-year low. The long-only investors' positioning in India is at a 25-year low. Hedge fund investor positioning in India is at a 15-year low, right? And amongst the emerging markets, they're maximum underweight on India. So we think actually on a 12-month forward basis, India offers a unique opportunity where investors are sitting in very bearish, and we see a turn in fundamentals in terms of the corporate revenue growth and nominal GDP growth.
That makes a lot of sense. Chetan, the other pocket where returns have been fabulous is precious metals, and the Indian household has benefited from that, even though we've not liquidated any of those holdings. But talk to us, a large part of this rally is because central banks have been shoring up on gold over the dollar. Is that trend something which will likely continue over the next decade? I'm trying to understand whether this is a decadal trend, because there are analysts sitting on both sides of the camp. Some saying that yes, gold will rally to a certain extent, thereafter central banks will start to liquidate. But where do you sit on? I'm trying to get a sense.
So look, I'm not an expert on precious metals, but sure, I'll just share the thought process that the strategy team has. So what they have been highlighting is that they see upside risk to this gold price dynamic. And their bull case scenario is 5,500 for gold price. And the backdrop to that is that there is effectively a situation where DMs, particularly the US public debt to GDP, has gone up. US public debt to GDP is at about 124%. And usually when you have high levels of public debt to GDP, you have two choices. Either you say, I'm going to take up fiscal consolidation and reduce my deficit, or you can say that we are going to have to reflate the economy and have nominal GDP growth strong enough, coupled with somewhat higher inflation. And that's the concern which the global marketplace has, that there is going to be effectively tolerance for higher inflation, and the US has seen already inflation 5 years above its goal, above central bank's goal. So that's what is creating this tension in the global community, that you're going to see this weakening of the dollar, and the dollar has already weakened as well in terms of actual trend. That's kind of fulfilling the interest in the market for buying more gold.
Chetan, always a pleasure speaking with you. Thank you so much for this perspective, of course, on both global as well as domestic. Plenty playing out, and this conversation was much warranted.